Market design. Please take your seats and we will start very shortly.
Gosh, Malta, that was very effective at having everybody arrive quietly. Thank you for returning so quickly after lunch. We are nearly to time, only a few minutes late, which is quite an achievement given the number of speakers on the panel. This afternoon, we're going to be starting with focusing on market design, which will pick up nicely from the discussion on flexibility options and the conversation around the market rules that could be useful in that space. And it's my pleasure to start by introducing Mr. Jochen Hohmann, who's the president of the Federal Network Agency in Germany, which is a multi-sectoral regulatory agency that regulates not just electricity, but also telecommunications, post and rail, I think. Have I missed anything? And in the electricity sector space has a much broader remit than any of the regulators in Australia, looking at competition and tariff regulation and also market rules. So it's wonderful to have Mr. Hohmann here with us today, and please make him welcome.
Yeah, good evening, ladies and gentlemen. I'm very delighted to speak to you, but I have a little problem. I'm not able to speak English, so I try to do my very best. I hope you will understand me, because I had not the luck that my colleague Falk Böhmeke had. My parents were not able to pay fees for studying in Sydney, and therefore you need a little bit of concentration to understand me, I think. First of all, I'd like to give you a brief sketch of what the Bundesnetzagentur does. You just mentioned it. Maybe it works. Yeah, it works. Don't go through the slide. You can read it if you want. It's just mentioning that I'll focus now on energy, but and more specifically on electricity, not on gas or not on buildings or transport or whatever. So I restrict myself to this part of energy, Wende, of energy transition that we are responsible for, what is our daily business, so to speak. We are a young institution. We were founded 21 years ago as a traditional economic regulatory authority, initially just for telecommunication and post. In 25, we open up this energy sector as well, allowing competition, and today the generation market, and that seems to be different from Australia, the generation market is lively and intact, and that is confirmed by our competition authority. After Fukushima, we decided in Germany that our electricity system should undergo a complete transition from fossil to renewable energy sources. That is what is famous in the world now as the German Energiewende, the next word after kindergarten that has found its way into other languages. It soon became clear that this would require a major expansion of the grid, and the Bundesnetzagentur became the agency responsible for planning and issuing approvals for power lines. And later, auctions for renewable electricity generation were added as well. And lately, we will also be responsible for the auctioning of the phase-out of coal. That is a very challenging job that we foresee for us. Or to put it in a nutshell, politicians set ambitious goals, and we struggle to implement them. That is the normal division of labor in Germany, as in other countries too, I think. That you have seen several times today, so I'll make it very short. We are aiming for 65% of electricity generation from renewable sources by 2030 and at least 80% by 2050. The current proportion was already mentioned, around 40%, what we have already reached. What is more, nuclear power generation is set to end in 2022, and coal-fired plants are to be phased out by 2038. And to achieve all this, there needs to be a considerable increase in wind generating capacity, offshore in particular, and photovoltaic systems. This presents a major challenge technically, economically, and socially, and I'm sure you know what I'm speaking about. Yeah, it works now, huh? Perfect. So, how do we organize the growth of electricity generated from renewables? Until 2015, there was a system of fixed administrative funding, and since we changed the system, the Bundesnetzagentur auctions generating capacity. There's now a funding rate per kilowatt hour that covers the difference to the actual market price. And in this way, we regulate the amount of additional capacity, and by funding the energy fed in, provide an incentive for efficient feed-in and operations. Up to now, we see strong competition at the auctions. We are pleasantly surprised by results of 0 cents per kilowatt hour for offshore wind, meaning that operators can rely on financing their investment on the market. But however, onshore wind power is a cause for concern at the moment because of the lack of competition, partly due to the difficulty of obtaining planning permission in the face of local opposition. We had already the subject acceptance in Germany and in our densely populated country. The carbon emission targets form the basis for the conversion of the electricity supply system. The EU wants to see a 40% reduction in emissions by 2030, and we underestimated market mechanisms. Unfortunately, electricity from wind and solar power squeezed out not the coal-fired plants, but with the high CO2 emissions and low marginal costs, but relatively environmentally friendly gas-fired ones with the high marginal costs and low emissions. And as a result, we in Germany have decided on a managed exit from coal that was mentioned today several times. The phase out of coal raises the question of whether there will be enough secure generation capacity. At the moment, there's still surplus power plant capacity, and as we are embedded in the European electricity market, we have additional security of supply. That's an advantage that we have from Australia. The Federal Ministry of Economic Affairs and Energy is monitoring developments closely. Its recent report on the security of supply concludes that there will be no shortage of generating capacity up to 2030. However, and that is the soupçon, so to speak, however, if no new gas-fired power plants are built, politicians will have to look at the situation again, to say it very prudent. Our most immediate challenge is restrictions in the transmission network. Cross-border capacity is being expanded and must increasingly be available for trading capacity by 2025 in accordance with EU legislation. We have to open our connectors for 70% instead of, what is the real figure now, 20% about? Yeah, so we have to transport much more energy. We have to give the possibility to transport much more electricity from Germany to our neighbors. And the second challenge is that electricity produced from renewables in the north and east of Germany has to be taken to the main consumption areas in the south and the west of the country. Both of these factors will put a strain on Germany's electricity grid, and the ongoing expansion of the grid is therefore of crucial importance. I would say it is a bottleneck for the Energiewende in Germany. And that you can see on the next slide. You see here Germany in a special form. You see the imbalances from north to south because the red peaks indicate what we expect to have from generation from wind in the north, and the green parts of the map show where are deficits in future. We are talking about 2030. And that means we have a massive transport problem from the north and east to the south and west. You see the figures there, a total of 50 gigawatts for wind offshore and onshore, and more than 60 gigawatt for solar. is what we need to fulfill our goals, and most of this will happen in the northern part of Germany, but will be needed in the southern part of Germany. And that leads me to our network planning. That is the network in Germany in the year 2030. And you see a lot of red and deep red lines. These are these lines that are overloaded more than 1,000 hours a year. And consequently, we are planning a major expansion of the transmission network, or better, the TSOs are planning, and we check it and finance it. Yes, yes. Projects will have a volume of about 40 billion euros. These are projects that have already been confirmed, and the 4 TSOs have proposed a further 20 billion euros worth. 4 high voltage direct current lines and probably a 5th will form the backbone of the grid. We are aiming for an operating voltage of 525 kilovolts, entering completely new territory in terms of cables. The planning, and in particular the approval procedures, are long and challenging, and I know what I'm talking about. Following local resistance, it is now planned to run the HVDC cables underground, which has set us back some years and is, of course, more expensive as well. But doing without the grid expansion would be even more expensive, and I'm pleased to say the planning and approval process is now making some progress, and we feel rather confident that the grid will be up to the job of the energy transition. That is what I wanted to tell you, and very shortly, I think I can answer questions if there are some, because I have an interpreter with me who wants to have a little bit work. If you want. Otherwise, I sit down and enjoy the day. Oh, no questions, auch okay. Da hinten.
Hi, Tristan, Green Energy Markets. We're likely to need to do a number of significant transmission expansions over the next few years. And we haven't really had to do very many for a significant period of time, and so community, and we're likely to want to do them in a hurry, I suspect, by the time we finally get around to doing them. Are there any lessons in terms of community getting, I mean, you just said you just sunk these HVDC lines below the ground, but if we don't want to do that, and we need to do them overhead to save money, are there some interesting things that you did to try and get community support and engagement, community support for new transmission?
Ja, das ist meine Wunschvorstellung, diese Unterstützung vor Ort zu bekommen. Die Erfahrung ist allerdings eine andere. Wir haben das NIMBY-Problem in Deutschland in extremer Form. Wir haben Politiker, die in Berlin entscheiden, dass eine Leitung gebraucht wird, um dann vor Ort der Bevölkerung zu erzählen, man kann das auch irgendwie umgehen. Das ist, glaube ich, ein völlig normaler politischer Prozess, wie er in allen Ländern im Zweifel bei solchen Diskussionen stattfindet.
Yes, I do understand the question that you have, and in relation to the situation in Germany, yes, we have certain problems at the local level, and we have this problem of NIMBY, not in my own backyard, also in Germany. For example, politicians in Berlin make certain decisions, etc., and sometimes there's not the support from the ground level, and so there's a normal process where you have interactions with the local community, etc., to see whether this should be done or not.
Was vielleicht wichtig ist zu verstehen, ganz am Anfang des Netzausbaus in Deutschland ist politisch entschieden worden, die Bürger sehr früh zu beteiligen, in einem sehr frühen Stadium zu informieren, was auf sie zukommt. Und im Gegenzug hat man dafür die Möglichkeiten der gerichtlichen Auseinandersetzungen verkürzt. Man hat also eine neue Balance hergestellt zwischen Beteiligung zu einem frühen Zeitpunkt und weniger Gerichtsverfahren am Ende. Die Beteiligung zu einem frühen Zeitpunkt ist schwierig, weil man noch nicht viel erklären kann zu einem frühen Zeitpunkt. Ob es am Ende weniger Gerichtsverhandlungen gibt, das wird die Zukunft erst noch zeigen müssen.
So another situation, another factor to take into consideration is that there is the push in Germany, for example, for there to be local involvement so that people at the local level are informed about what is actually planned. Now, the point of that is that this also then allows an amount of time for people to then take legal recourse to protest, to protest and also appeal against the decision for a high voltage transmission line to be built, etc. So there's kind of a trade-off, or there's a balance between informing the public in advance and then also allowing enough time for those people to make, to protest or to take action against proposed plans on the other hand.
My name's Colin Long from the Victorian Trades Hall Council, which is a peak body of trade unions in this state. It seems to me one of the major factors contributing to increased cost in the whole system, but making it very difficult to plan grid upgrades in Australia and Victoria, is the lack of a timetable for the closure of coal-fired power stations. Just wondering how important having a timetable for closure of coal plants has been to managing grid upgrade processes in Germany.
Wir haben einen sehr komplizierten und sehr detaillierten Prozess bei der Netzplanung. Wir beginnen damit, dass wir uns eine Vorstellung darüber machen, wie sieht die Energielandschaft in 10, 15, 20 Jahren aus. Das heißt, wir gucken ganz genau hin, welche Kraftwerke liefern zu welcher Stunde, unter welchen Marktbedingungen, welchen Strom. Und das gilt für alle der verschiedenen Erzeugungsarten. Das ist ein hochkomplexes System und nur wenn Sie das haben, können Sie anschließend ein Netz dafür planen. Das ist bei uns sozusagen das Basismodell, mit dem wir Netzplanung machen. Und wir haben in der Netzplanung bereits vorgesehen bei uns. Erstens den Ausstieg aus der Kernenergie, der ist sozusagen eingepreist, aber auch der Ausstieg aus der Kohle, jedenfalls bis zum Jahr 2030. So lang gehen bei uns bisher die Planungen. Was bis dahin an Kohleausstieg stattfindet, ist in der Netzplanung bereits vorgesehen.
So in terms of, we have a very complicated system and we have very detailed planning about the future projections, etc. So we need to have an idea what's going to be happening in 10, 15, 20 years' time. We need to know what type of power, what type of sources, what type of electricity, the energy mix, what type of things are available to us. So this is all a very complicated area, and only when you have that type of security or knowledge about what you're then facing in the future can you make decisions. So there is, for example, as you know, the decision to phase out nuclear power stations. There's also the decision to phase out coal power stations, etc., by the year 2030. So this type of planning is necessary, but there are still other complications which can occur.
Mr. Homan, thank you so much. And thank you for taking questions as well. We appreciate it. It was,
Thank you.
I'd like to now introduce the chair of the remainder of the session on market design, Dr. Marnie Shaw. She is the lead researcher at the Battery Storage and Grid Integration Program at the ANU. And I need to extend a special thanks to Marnie because she had to step up to chair this session, I think, yesterday, maybe the day before, but at very short notice when Lachlan Blackhall was unable to attend for health reasons. So thank you very much, Marnie, and over to you.
Good afternoon, everybody. It's my pleasure to be your chair for this session. And I think just to start by thinking back over the discussions this morning so far, it's really clear that market design questions are extremely important and timely, both in Australia and in Germany. So in Australia, the Energy Security Board is currently putting together a submission for suggested changes to the Australian electricity market design, which is called NEM 2025. So these changes, potential changes to the electricity market design, are in discussion as we speak. So it's a very timely discussion that we're having today. So I think it's a good place to start by thinking about our current energy market that we have, which is no longer fit for purpose, and that's why we have to have these changes. So what needs to change in the market is changes that will allow us to accommodate a higher percentage of renewable energy, obviously. And we need to have changes that will price and value all the points that we've been discussing today. Dispatchable generation, demand response, frequency and ancillary services, and services that are currently provided for free, as we've heard today, like inertia, as well as tariff reform and price signals to increase investment in renewable energy where we need it. So I think we're extremely lucky today to have the panelists that we have to give really different perspectives on the kinds of changes to the market design that we need to be thinking about, both from the German perspective as well as the Australian. So I'll just introduce to you now the panelists that we have. We're very fortunate to have David Swift, who is an independent advisor on energy market development with the Energy Security Board. David was previously at AEMO. And we have Felix Mathis, who is the research coordinator for energy and climate policy at the ERCO Institute. That's the Institute for Applied Ecology. We have Associate Professor Tim Nelson, who is Executive General Manager, Strategic and Economy Analysis at the Australian Energy Market Commission. So they're the ones who make the rules for the energy market in Australia. And we have Dr. Marco Nicolosi, who is a consultant for Connect Energy Economics. So Marco works as an advisor for federal institutes as well as utilities and industry. So thank you very much to all the panelists for coming today, and I hope we'll have, oh, sorry, one more person. Sorry, Rosemary. Very important. Rosemary Sinclair, you're right at the bottom, who's the CEO of Energy Consumers Australia. So Energy Consumers Australia is a really important body to give the voice to consumers in Australia. So I think she gives a very, very important perspective to this discussion. So thank you so much for coming. So for now, to kick off the panel discussion, I'm going to ask each of the panellists to come and give their 5-minute presentation, please. I think there'll be some signals to tell you when you're running out of time. So I'll start by inviting David Swift up to the panel. Thank you, David.
Thanks, Marnie, and good afternoon, everybody. For those who don't know, in Australia, the peak body for energy policy is actually the Council of Australian Governments Energy Council. And I guess the same as Germany, we have a federal system here of states and the Commonwealth, and so this coming together of all the governments and ministers responsible holds that power to change things and to set up the policy frameworks in which we all work. And that council, recognising that we were going through a major transition, and we've talked about that already this morning, and I think anybody involved in the industry is very aware of the scale of the transformation that was already underway. And they charged the Energy Security Board with having a look at developing advice for the future market design. Or put simply, is the market design that we have today fit for the future? And that's what's called the 2025 Market Design Project. The fundamental market design in the NEM hasn't changed since it started in 1998, but obviously the whole context around the market, the policies, the technologies that we have, the mix of generation that we've got has changed dramatically in that time. There are lots of initiatives underway, by various bodies, including the market bodies that are part of the ESB, looking at various aspects of market design. But this project represents a rather rare opportunity to stand back and look at where the whole design and whether that works. And I guess one of the key questions is, if we evolve the market one step at a time, as we are now, will that get us to where we want to go, or do we need to actually take a different turn? And in thinking about the market design, we're taking the widest possible interpretation of what market design means, and it covers really the whole end-to-end process of meeting customers' energy needs. So that's whether the provisions are actually through regulation, through standards, or through competitive markets. And the arrangements that are in place today are a mix of all those things, and it's really then what sort of mix of those different approaches is going to work in the future. Might say the ESB also is acutely aware that the market extends way beyond the formal market design and the physical market design, and includes the financial and contractual markets that sit around it, and the commercial arrangements that parties make amongst themselves. The project's now underway, and the issues paper's been released at the end of August. And in that issues paper, we offer 5 key areas that we think need to be really considered carefully, and potentially options thought of that might work in those areas. Taking them one at a time, we have integration of variable renewable generation into the grid and the market. There's been a number of issues now about the connection of generation to the grid, but also there's, once it is connected, how it actually operates in the marketplace. Our marketplace has been based very successfully on self-commitment and self-dispatch. Will that continue to work adequately in a much more dynamic world? There's the question about the investment signals that the market sends, and whether it will provide the right investment signals to drive a much more complex mix of renewable generation, diversified across different technologies and different areas, and a range of other resources in terms of storage, battery storage, pumped hydro storage, and fast start generation that might be required. How do we integrate distributed energy resources into the mix? When we look at the future, we're seeing something between 1/3 and 1/2 of Australia's energy within 20 years could be coming from behind the meter. That's not currently seen as part of the market. It's really an appendage. It's treated really as net demand, and that needs to be rethought, how that is integrated in to try to get the right overall answer, what's the most economic outcome for consumers. We also got to look at the system services that are required to ensure the security of the power system. There's no doubt that they need change in that area. There may be more additional services need to be priced and valued, as Mani was suggesting. It's also possible that we need to reconfigure the ones we've got. The frequency control services, the co-optimised markets that we have, very elegant piece of market design, but they were really designed around the capabilities, the technical capabilities of conventional thermal generation. Should that change? And how do you allow innovation in that, knowing that there's a lot of manufacturers, a lot of German manufacturers, who are doing all sorts of work to develop new technologies to meet these security challenges? And the last but also very important is how we change our market to provide for innovation and development in the whole retail customer interface end. I think the market is structured in Australia around a certain way of thinking, and whether that's the way that we'll see customers interface with the market in the future, whether it's with retailers, how aggregators fit in. I personally back Siri to be the leading retailer in Australia within 5 to 10 years. But how these arrangements work, and how we actually set up a framework that allows things to develop as the market wishes, and keep the regulation out of the way where it can, and make sure that it actually still protects consumers where it needs to. We've begun consulting widely, thinking through these matters, and we've also done a lot of work. We're completing work that we'll publish about the end of this month on what international experience can show us. Obviously, we've been looking at the German market arrangements, and the policy wrap around that has some interesting learnings there. We've found internationally there's some very good models to think about, not to say we certainly won't be adopting any one model in toto, but there are elements that are worth thinking about. Those elements, though, tend to be in the areas of system security and the investment issues. I think we're still yet to see good international experience on really how you do integrate DER and what the retail market of the future looks like. Look forward to you giving me all the answers in today's session.
Thanks so much, David. I think you've got a tough job ahead of you. So now I'd like to invite Dr. Felix Mates to come and give his presentation. Welcome.
Thank you very much for this opportunity. What I would like to do in this short presentation is to give you an overview on where the discussion on market design stands in Germany. So this is an ongoing process. And I would like to start with a remark on there is no generic debate on a market design. There are different phases of the transition or the transformation, and it is important to note in which phase you are. And what you can see here in this first slide that I'm a friend of long-term time series where we stand at the moment, and I think there are five highlights. The first is the nuclear phase out is almost done, 2022. 10 gigawatts we have still in the system will be shut down until 2022. We will see the coal phase out, where I would like to highlight that the coal phase out is focused very much on the 2038. This is not the interesting part of the coal phase out. The coal phase out, the interesting part is what happens until 2030. 60% of the capacity will disappear from the system by 2030. And if you see 65% renewables and scarcity prices in the carbon market, I'm not entirely sure if the coal-fired power generation will hold until 2038. But we need to consider that as a total from the nuclear phase out and the coal phase out, we will lose 50 gigawatts of firm capacity in a system where the peak load is 83. So this is one key issue. The third is, and Stefan told that we both spent the second half of last year in the Coal Commission. If the new paradigm is climate neutrality by 2050, in 2028 we will see the need for gas commission, because climate neutrality is only possible without any fossil gas. And that means we will see a lot of capacity, gas-fired capacity, but there is no option to fire this capacity for the next 30 years by fossil gas. That means we need to prepare for a situation where we also will lose the natural gas. The fifth issue is that we see, the fourth, that we see almost stagnant power consumption by 2030, but beyond 2030, most of the modelings, and we work a lot on the projections for the German government, see a 20 to 25% increase of power for transportation, for a bit of green hydrogen, etc., etc. And this gap needs to be filled by renewables. And you can see here that this gap is significant. And I think if we discuss on market design, then we need to consider these trends. And I would like to rush through the 7 segments of a market design which I see to be important in this phase of transformation. So you have the usual split. We have the demand side of the system, we have the infrastructure side of the system, and we have the supply side. And from my perspective, there is a discussion, or there are many, many discussions on at least 7 segments of the market design. The first is we have a in theory, a consensus in the German debate that the energy-only market is the key element for organizing the future system. So we have made significant progress in the wholesale market. We are trading at the level of a quarter of an hour. We have an increasingly liquid intraday markets. We have, however, major distortions if it comes to the retail. So we have all the taxes, the levies, the surcharges, and the fees. And if you use the German acronym for taxes, levies, and surcharges, as Steuern, Abgaben und Umlagen, then you can use the acronym of Stau, which is a German word for a traffic jam. And that means, although we have this huge consensus that all these distortions for the coordination need to be removed, it is extremely difficult, and it's a long process to have these. Second, we have the ancillary services market. We made progress on opening this to build a level playing field, but it's still a way to go to bring the demand side in, to bring the batteries in, to bring everything in. But we need to do so because the future system is a system without rotating masses. And this is a key challenge, and therefore the ancillary services market is important. There we have a consensus, we have a stepwise opening, but until we have reached a complete level playing field, it's still a way to go. Which is an interesting feature, which is not that beloved in Australia, is the carbon market. The carbon market is an important part of our electricity market. After 13 years of struggling with the European Union emissions trading system, we have now significant prices, and the significant prices are working. So if you have a look on the German hard coal-fired power generation, it's increasingly squeezed out of the market purely by the carbon price. So we have at the moment 25, 30 euros, and that's it's squeezing out a significant chunk of the hard coal-fired power generation. The unknown territory is how far the carbon price will be able to trigger all the investment in the renewables. Because if one day, always if the sun is shining and the wind is blowing, the price at the wholesale market is zero, then whatever the carbon price is, then we need to ask questions. So it's unknown territory. We have an ongoing controversy on the need of capacity market or capability market. The German government has made a decision to go for the energy-only market without systematic capacity mechanisms. Instead of this, we have, according to my count, 14 different capacity mechanisms, most of them arbitrary. We will see this debate again. So capacity market is a toxic word at the moment in the German debate. So the Coal Commission has made a recommendation, and because the term of investment payback gap closure mechanism was too complicated, the Coal Commission has recommended a systematic investment framework because we need to deal somehow with the decommissioning of firm capacity. So, and this is one of the key issues, and that relates also to the demand side, etc., etc. I'm pretty sure that we will see this discussion again. We have made some progress since the last December. The European Union has issued new legislation which establishes somehow environmental safeguards for capacity mechanisms. It's not longer allowed to pay to issue any capacity payments for capacities which have specific emissions more than 550 grams CO2 per kilowatt hour. So there are environmental safeguards, and we will see how quickly we will re-enter this debate. The challenge ahead is what is the future of the remuneration mechanism for the renewables on the longer term. So I foresee a decade where significant carbon prices could lever some of the renewables, but for the period beyond 2035, we will need to think about other remuneration mechanisms. We made the transformation from the feed-in tariff to the asymmetric contract for difference. We will see how long this holds. I could imagine a smart capacity mechanism also for the renewables, but we will need some of it at least after 2030. we have a consensus and the challenge ahead on the infrastructure regulation. We have an issue on unbundling. Unbundling is, from my perspective, an extremely important issue, and we have some attempts to water down the unbundling, that networks operators try to get the investment into electrolysis equipment as a regulated asset, et cetera, et cetera. And I think that this will be a major challenge to maintain the unbundling. The investment issue on the grid has been mentioned. We have an issue with the integration of the network planning. Because if you have a look on this long-term vision, then it is obviously that we need increasingly to plan together the electricity networks and the gas networks and the future hydrogen networks. There's no way to have a separated planning on this. In addition to this, we have a very specific, crazy German debate, a bizarre debate between the TSOs and the DSOs. Who is the system leader of the future? This is definitely no fun. This is bizarre, but it eats up a lot of political capital at the moment. But this integration is important. And one of the interesting issues is what will be the level of system services which will be delivered from the networks. If we have 16 gigawatts of converters, DC converters in the system, these DC converters can deliver system services, voltage control, et cetera, and how to explore this type of system services is important. And we have an issue which is not yet on the political agenda. But we are going towards a system which is coordination intensive and which is capital intensive. And somehow these characteristics will be mirrored in the cost and the pricing structures. And so we are entering a system which is full of flat rates. And the key issue is, what is the future of energy efficiency in a system where tariffs are essentially based on flat rates? And so we need to start to think about a future market segment, what I would call the bulk energy efficiency, because although it is all about capacity, bulk energy efficiency is an important issue. So, and I think you can see here that there are many discussions open. We have partly solutions, but what we really need is to discuss these 7 different segments for the perspective until 2030, 65% renewables and 60% of the coal disappeared, and we need to prepare at least initial elements of the market design, which is ready for 2040 and 2050. Because what we have learned until now, that rarely the systems are operating, then the regulator or the legislator has assumed ex ante, and so we need a lot of learning by doing on this. And I think this is an important that you really rush through this. There's one last point which is still unsettled in the German debate, and this point is about 2 issues which are probably partly specific for Europe and Germany, but partly not. The first is where to integrate locational signals. Because we see changing spatial patterns, and there is a huge debate on economic core beliefs of where to allocate the locational signals in the network pricing, in the remuneration mechanisms, in the capacity markets, wherever. But the key issue, and this is totally unsettled at the moment in the German debate, where the locational signals should pop up. And this is an open issue. The second is that, and that's a difference to Australia, we are operating the German electricity system in a highly intermeshed system. And the key issue is, what is the role and what are the limitations of cross-border integration? And this is a highly political issue. So we have the assessment of our famous Ministry of Economic Affairs and Energy, who says, okay, we will be able to cover 30% of the peak load in Germany by capacities abroad. You can believe in this. You don't need to believe in this. And it is full of assumptions, what happens in the countries abroad. And so it's a political issue. And how strongly the security of supply in a country will be depending on cross-border capacity exchange is an open question. It's unsettled. At the moment, we have a dominating theory in the system. How far this holds is open. And to end with this, an anecdote from the Coal Commission. We had the East German states, which have been very much in favor of the energy-only market 2.0, and which have been very much in favor of cross-border integration when we discussed the energy legislation on this. When it came to the coal phase-out, the prime ministers of these East German states said how much firm capacity we need to maintain domestically. And all these guys who praised all these cross-border integration said, we are not able to accept that we don't cover 100% of the firm capacity domestically. And I would say, okay, that's probably a bit too far, but that's part of the political reality we need to deal if we discuss the market design. Thank you very much.
Much, Felix. Be interesting to hear Marco's perspective on some of those issues as well, but you're not up yet. First we have Tim Nelson from the Australian Energy Market Commission. Thanks, Tim.
I've got some slides. I thought I didn't have slides. There we go. Couldn't agree more with what David was saying, though, about the importance of the 2025 project. It's very rare that you get an opportunity to really reflect on what some of the core issues facing the market look like today. I guess if I move into slides. I guess just as a reminder of where we've come from, this was what the NEM was all designed to do. We had a generation market, an energy-only market, but with a derivatives market that David spoke about, in the sense of providing that ability to price capacity through cap contracts and those types of things. We moved to full retail competition once competition was deemed to be effective under the Australian Energy Market Agreement. We were regulating networks on the basis that they had monopolistic characteristics. And I guess the overarching principle, and I keep coming back to the principle, was that we were allocating risk, I guess, to the participants that were best placed to manage that risk. So if I think about, I guess, the way in which markets tend to look in the sense of market design, this just maps out, I guess, the way our market currently looks. And again, you can, dice this up a ton of different ways. But I think in my mind, it talks to the time frame, the temporal nature of this allocation of risk being from in-day all the way throughout to the 4 to 10 years mark. And I think most people would say that in terms of allocating the resources that are in the market today, it's actually a pretty good outcome. So it's a pretty efficient dispatch engine. But we've got this changing nature of residual demand. And that's the point that I'd really like to talk about a little bit more, because the market signals that we're seeing today are very different from what they might have looked like several years ago. This slide shows the median, the 5th percentile and the 95th percentile of residual demand since 2010 in the South Australian market. And you can see that the type of generation that would have been needed in 2010 is very different from the types of generation that we need today. We generally need fast start flexible plant rather than a plant that switches on and then slowly ramps up and slowly ramps down. Now, the interesting thing I find in thinking about what the market's pricing at the moment, we know that forward curves are indicating that there's a lot of new supply coming into the market, meaning that prices are coming down, at least in the forward curves. But we know there's this change in the shape of the curve. And I think that's the thing that I'll talk to about the economics of new plant in just a second. So the change of the shape in the curve is that we're seeing more and more variable renewable generation pushing down the price at certain times of the day because of the coincidental production nature of renewables in certain geographic regions. But what we're finding is that's also meaning that prices at the end of the day are higher than what they would have been, say, 5 years ago. Now, the open question is that a sustained dynamic? Is that a dynamic that's just temporary until we see some new investment? And it's the new investment that I want to focus on, because this shows the change in the proportion of pool revenue that you see coming through the market. The dark blue being the prices that are under $100, the light blue being the prices that are between $100 and $500, and the red being the prices that are above $500. Now, what I find fascinating about this chart, and economists always say their charts are fascinating, so it's probably not that fascinating, but you can see that the light blue in the past few years has increased substantially, and that's consistent with that dynamic that I was talking about before. Lower prices at certain points of the day, but then higher prices at other points of the day. Now, if we think about what these prices look like in certain regions, and this, I think I'm going to ask you the question rather than come to a conclusion, is that we have seen a growth in price events in Victoria, for instance, of prices between $300 and $1,000 a megawatt hour quite significantly in the past few years. And the only observation I would make is that there is no plant in the market that has a short-run marginal cost of between $300 and $1,000. I'll just throw that out there. And I guess the second point that I'd like to make is that the under-cap revenue for a new entrant open-cycle gas turbine or a reciprocating engine or some type of storage is very significant now. This shows the revenue that a participant could earn if they had a short-run marginal cost of $150 and they were earning just pool price revenue for when the price was below $300. The reason that's so important is that $300 is generally the cap strike price, and therefore for anything above $300 you're generally earning the revenue from selling your cap contract rather than relying upon the spot market revenue. So, if you wash all of this through an economic model, the change in the pricing dynamic of our market at the moment, the implied cap value that you would need to get a new project away on the basis that that change in under-cap revenue is sustained over time would be about $10, based upon those simplistic assumptions. And I know they're simplistic assumptions, but they give you a feel for the, I guess, the issue that we're seeing in the market. Cap prices in the forward market are well above $9.85, and yet new investment is not happening. And so the open question I have for everyone in the room is, why is that? And different people will have different perspectives. Is it market design? Is it price, technology deflation risk? What I'd also like to posit is, are we seeing those issues manifest in a market where most of the costs outside of these types of investments are generally heavy fixed infrastructure costs in a market where traditionally they've not been? And I guess the second element of all of this is the role of the demand side moving forward, and in particular the role of digitalisation. And I know David mentioned Siri. As a person who has Google Home in their home, I try and instruct my kids that it is useful for more than just asking it to make fart noises, and that it will in future be used to kind of automate our lights and our appliances and those types of things. But participants may also be seeing this market and thinking there are these new technologies coming through. So when we're thinking market design, I think the big opportunity for us to get it right today is to think not just supply side, but very much that digitalisation of energy supply. What does that mean, particularly for how customers or agents on behalf of customers will seek to operate in that particular market? Now, I guess a shameless plug for the Commission's work program in trying to address some of these challenges. Tom Walker, my colleague in the front, is heavily involved in number one, which is generator access and transmission pricing. This is this thought of how do we get the right locational pricing signals, because we're seeing this shift in the types of generation being installed. System security is obviously a big one. Integrating DER. We've got a major report coming out in the next couple of weeks on our electricity network economic regulatory frameworks review. I would encourage you all to have a look at that because I think it's very useful. Digitalisation of energy supply, and then aligning financial incentives with the physical needs of the system. Can't emphasise enough though how much the ESB 2025 process is important for providing the way in which all of the market bodies are trying to integrate their work programs into this bigger picture exercise about what the market looks like longer term. Looking forward to your questions.
Okay, now I'd like to invite Marco. Thanks, Marco.
Thank you. I think we have a very good opportunity today for a very interesting discussion. I would like to share a couple of thoughts from the German discussion on market design. The main focus was capacity markets, energy-only markets. Felix mentioned it briefly already. And I also would like to mention, just as a grain of salt, the German system fundamentals are very different compared to the Australian. So I'm not proposing by any means that you can use anything one-to-one. It's very fundamentally different, but maybe some insights, some questions might be helpful, I hope. So we did a study for the Ministry of Economic Affairs and Energy back in, when was it, 2014 maybe, I think. And the question was, okay, we have this energy transition. So we are building up expensive renewables, and it's growing and it's flourishing and so forth. That's wonderful. And then we also saw the utilization of the conventional capacity went down. How should we deal with that? So the question obviously arises, should we have capacity markets? And then the obvious question is, okay, we support renewables and they grow, and then we also want system security, so we also let this grow. And then we have these both systems. One is renewable, the other one is conventional, and we basically pay for both systems. That's basically the question. My economic mind tells me that's probably not the most cost-efficient solution, and somebody has to pay that, and that's, at the end of the day, it's a customer, right? So in the so-called LEAD study, we looked at it and thought, okay, maybe there are other options than just fully funding two systems parallel. And then the question of flexibility arose. And I think that's the main focus of my input, that we in Germany, and I think overall, globally, when I have different discussions, we don't fully understand flexibility completely yet. So it's a very interesting also research topic. And I would like to just add a little bit to the discussion. One challenge we see is volatility, right? So sometimes renewables are there. That's on this side. We see high renewables and very low demand. Then usually we see negative prices or very low power prices. On the other side, we see very high demand and basically no renewables right now. So there's a big volatility in the system. And that's usually one part of the question, how to handle this volatility, especially when there's scarcity. I should mention, as an economist, I'm used to talk about elasticities, but they don't have a time dimension, so I just want to use the term flexibility because it's more meaningful, I think, in this context. And when it comes to robustness or security of supply, then this is what we don't want. Inflexible supply, inflexible demand. So that means supply and demand curves don't match, and it means, well, the market doesn't clear and we might have a supply problem. What we like is flexibility. So when the crucial areas of the supply and demand curves are flexible, then there's always a match. And when there's a match, there's a price. And well, economists like prices because they tell us something. There's a signal, right? So we always want to have a price because that also means there's always security of supply because supply and demand match. That's the situation we like. But we are afraid of that part. We don't like that. But that's a big threat, right? So how should we handle that? And of course, those are very stylized textbook, complete market economic pictures. They are nice, but they are not the real world. The real world, when we look at the power markets, they look more like this. That's from one particular situation, all the demand and supply bits stacked up. So it looks very different, but you can see sort of the same pattern. And so there's one area that's very flexible. So there's a lot of trading going on. And areas that are rather inflexible, right? And sometimes we touch these areas and then we get a little bit scary. So what's happening there? And what we actually want to do is increase flexibility, right? And on the demand side, it would look like this. So consumers just react to prices, and by increasing the flexibility, there's a higher chance of supply and demand meeting. On the supply side, we saw that utilization goes down of these power plants, of course, because renewables take a lot of their hours. So what needs to happen is a shift from base load to more peak load plants. They require less utilization, so there needs to be an adaptation, a continuous development towards more peak load. And these areas are more interesting for renewable integration. So especially when we talk about must-run plants for some reasons. I'm not sure if you have combined heat and power plants a lot in Australia, but that can be must-run plants or must-run plants for ancillary services, stuff like that, that can take away space from the power sector, and well, they can lead to must-run restrictions. That's one thing, and in Germany, there is an issue with support of renewables. They bid negatively into the power market, so that's also something you can be more flexible about. And the other side is, again, the demand side. There we talk about coupling of sectors, and this can stabilize prices to a significant degree when you have all this power to X we talked about earlier, when there's opportunity costs. Like if I can run something like heat plants from either electricity or from fossil fuels. So there's opportunity costs in the system, and that can stabilize the prices. So overall, we came to the conclusion that an integrated system is much cheaper than two parallel systems which need to be funded by customers. And we think the first question we should always ask is, do these system elements behave what we expect them? And if they don't, why not? Maybe there's some sort of barrier or unnecessary uncertainty which we can address, like, for instance, having a coal phase-out plan increases the investors' confidence when it would be reasonable to build something new, for instance. So there are always these questions like, why don't they react? And we have a couple of barriers and price distortions still in Germany, where we can, just by tweaking regulation a little bit or increasing or decreasing some price distortions, that we believe that people react in a more reasonable way what we expect. I can talk more about examples, but that's not a relevant point at this moment. One crucial element for this entire discussion was that we found that we have many, many more flexibility options than the energy transition requires. And because we have so many, that's a luxury, right? If we had too few, we would individually pick them and support them and bring them to the market. But because we have so many, there can be a competition about the right flexibility options that serve the right purpose. So we can organize competition between flexibility options, and that's actually the way of low-cost energy for the consumer, rather than when regulators or the government think they know what the next 20, 30 years will be, and then selecting the technology, and then the customer has to pay for it. So it's basically a question of who is responsible and who pays for it. And we believe that the market, and especially customers, can choose more wisely than the government. I'm sure we have a controversial discussion.
Thank you. Sean. Thank you. Thanks so much, Marco. Now I'd like to invite Rosemary Sinclair to the podium. Thanks, Rosemary.
To be part of this discussion, and I just want to focus my remarks entirely from what consumers are thinking about all of this, and our topic, which is market design. So my first slide would suggest to you that the consumer perspective is that, pretty self-evidently, this market And when I say market, I include also the regulated parts of this market, which this slide does, is not working for consumers and has not been working for consumers for some time. If we compare the price outcome over 10 years with CPI and wages growth, then I would say that for the first time, actually, I have seen a regulatory authority, our ACCC, quantify political risk, and that is the area under that curve. So when I talk about market for the next 5 minutes, I'm going to talk about all the elements that we understand in terms of generation, so physical and financial, network, transmission and distribution. However, I want to add consumer assets. I'll come back to that later. Your DER is actually my assets and appliances. And importantly, information and security platforms. Those are matters that are becoming very, very significant in our market. The market also has a range of policy dimensions that we want to achieve, and to state them very, very simply, they are investment, innovation, competition, and consumer protection. And in consumer protection, I would include protection against monopolies, in other words, network regulation. At the end of all of this, consumers want comfortable homes and competitive businesses. That's our interest in all of this. Let me now go to technology. And the purpose of this diagram is really to say that from our perspective, we see technology as an enabler, not a problem. And we see it enabling much more choice, a range of different ways of doing things, and to actually secure those benefits for consumers, we need markets that are very open and flexible. We need, if you like, to add an innovation focus to the investment focus that we already have. So our compass through all of that is that wherever we can embed or enhance competition, that's what we should do. Through the thicket of incentives and self-interests, sometimes these things get played out in standards forums, we should go for open, interoperable and competitive. Next point I'd like to make is that the consumers are actually bringing significant, relevant digital experiences from adjacent markets. And they want to do a whole range of new things, our research is telling us, in this market, some of which were referred to by Gemma earlier. They want to trade energy, they want to donate energy. They've got all sorts of innovative ideas about how we make sure that everybody in the community has access to the energy services they need. So if we think about what's happened in transportation and accommodation, where consumers have been presented with very user-friendly trading platforms, we would call them Uber or Airbnb, right? We've now got them trading their assets. I can trade the front seat of my car for 20 minutes at a time. I can actually create a revenue stream for myself from my front bedroom for a day at a time. I can take my assets, and if you give me the trading platform, I can create value for myself. I'll come back to that point about value in a minute. But that suggests to us that the problem is not the consumers in this sector. The consumers are actually pretty clever and they're pretty active when they're given the right tools and information. The other thing I would say, and this is a very particular Australian example, and it's a relevant example at the moment, given that it's a grand final football season, whatever code you follow really, consumers have jumped the fence. Over 2 million households with solar on their roof in Australia tells you that we're in a different world. And it doesn't matter how much the ref shouts at them, they're not going to march nicely back into their seats. So educating consumers is not going to create value for them. Trust is going to be built through finding ways of creating and sharing value. And I would suggest that we're going to do that by driving the value as close as possible to the consumer, in the way that the mobile phone did. What has more value to you as a consumer? Think about your mobile phone. Is it that you can upload 2 megabytes of data? Or is it that you can send grandma the first picture of her great-grandchild? So the consumer construction of value is around what the service means to them, not what it means to the network or platform provider. So again, I would say, when we talk about distributed energy resources, we actually need to remember that often we're talking about consumers' assets, and increasingly we're going to be talking about their appliances. So this task of transition now is really a socio-technical task. It's not just an engineering task. We've added economics to engineering in this sector very successfully for a long time, and now we need to add expectations to the economics and the engineering. A little bit of homework on this point. The Australians in this room will know I wander around Australia giving people homework. There are 3 things that I'd like to suggest you think about, all by the same author actually. One is The Fifth Risk, which is a book by Michael Lewis. And the 5th risk is actually this. The risk is that we take a short-term response and put that in place of a long-term plan. So we would say, for the consumer's least cost pathway, we need to be at least thinking about a scenario net zero emissions 2050. We don't have to take an ideological position on that. We just have to include that as a scenario. The second book I suggest to you is a book called Moneyball, again by the same author, which was all about spotting value where others can't see it, this time in baseball players of all things. And the last one is called The Undoing Project, and that is about individual decision-making, which of course is the bedrock of economic theory, but we're only just starting in the last 30 years to understand individual decision-making, that rational decision-maker who's going to do all sorts of good things on their own behalf and behalf of all the rest of us. We're only just at the beginning of understanding how they make those decisions and how we need to communicate through them, to them, whether through price signals, risk profiles, or value. So the elements of market design as we see them are these. These are the 3 big outcomes we want. We want energy services to be affordable, we want them to be individualised, and we want them to be optimised. And just briefly on each one of those, affordable, in the sense that that's the easy one. Price is the price of the consumer trust that we need to get their support for this transition, where we're going to be spending billions of euros or billions of dollars. We're not actually going to handle this transition at net zero cost to consumers, but they are the ones who are going to be carrying the costs, although we can have a discussion about how much they should be carrying. Secondly, individualised. The framing here is really important because it gives significant weight to demand-side decisions. So the PVs on the rooftops, the storage in the homes, demand response, energy efficiency, Internet of Things, artificial intelligence, Siri-enabled hot water, air conditioners, lights, pool pumps, electric vehicles. They are all assets that are bought by and used by consumers, but they're in a very important part of our overall system now. And the last one is this optimised framing. As we move to a cleaner energy system within a cleaner economy, Optimise, we think, is the essential framing to creating a shared value outcome. Current attempts by some to try to recreate the certainty that has been a feature of this market, we think are problematic. We think the direction of travel of the technologies in play are that they are modular and mobile. They can pop up anywhere. The context in which we're dealing with all of this is captured by a phrase, decision-making under conditions of uncertainty. That's going to be the new normal. It's not going to go away. And the new task, therefore, through market design, is to create a variety of response capabilities that are available just in time and at the most efficient cost we can deliver them for. Thank you.
Thanks so much, Rosemary. Thank you. So I think you'll agree that the panellists have given us a really interesting array of perspectives around market design. Rosemary giving the perspective of consumers and customers who are at the centre of using the market. The two German perspectives that seem to have quite overlapping but different views on all the elements of the German electricity market, and then the exciting changes that are coming forth in Australian market design with ESB 2025. So thank you very much to all the panellists. Really appreciate that, and I would like to open the floor now for questions. Does anyone have one?
Yeah, hi. My question's to, I'm not sure exactly your name, but we have an energy-only market, and the answer in response to we don't need a capacity market, because what we do is we just flex our price cap, which is currently at $14,000 a megawatt hour. We just flex that upwards if we need a higher return, and if you get dispatched, then that keeps you available, and therefore we don't need a capacity market. But there, I suppose, grappling, the counter side to that is, well, that just means there's an excessive level of volatility in the market, which means that it makes the market highly risky if you just get your timing wrong or your generator's not available. To what degree have you guys dealt with that issue and decided, look, we only need it, an energy-only market will do the job, and we don't need capacity markets, or yeah, we're going to need something extra to grapple with this need for something that's dispatchable, and it's not just a matter of just lifting the price cap and that'll solve all problems.
Yep.
I'm looking at the German experience, but David might be would certainly be able to knowledgeably talk to it, I'm sure, as well.
Yep. That is one of the key issues that we'll be looking at in part of that investment for reliability piece of the puzzle. So do you need to go to a capacity market mechanism, or will the current mechanism as it evolves and as you allow maybe higher price caps, and there's things you could do around the stepped or staged administered price caps to manage the overall risk that led to. Will that still work? And that's an open question. I'd say what we have found looking at worldwide is that the religious debate between capacity markets and energy markets seems to have abated somewhat. And if you look at many of the US classic capacity markets, they now have price adders and lifters into the price to make the energy price look more like an energy-only market price, because without those drivers they weren't working well. And lots of the energy-only markets are getting some form of additional compensation for capacity, whether that be through availability payments or through some forms of soft capacity markets. In fact, the RRO could almost be seen as a kind of a capacity type mechanism in a soft sense, as the French market is, and so on. So I think it's a wide open question, and I don't think you need to think in terms of it being a yes-no anymore at all.
Yeah, I suppose the you know, it's not like the WA market. The thing I look at that, I think, well, a lot of those guys get paid and they're not even available that if we need them. And that's the beauty of, you know, if you're not there and you're not delivering, then you're not going to see the benefit kind of thing.
Yeah, but I think there's also, I'm a social scientist, and there's also a social science answer to this. So I'm a strong advocate of an capability market. When we had this overheated debate in Germany, one of the proponents of the energy-only market, Christoph Maurer and me, we did a trip across the US, and that was pretty enlightening. First, we were in Texas. Texas, it's the energy-only market with the operating demand resource curve. That means even if there are price spikes, the regulator puts another $3,000 on top of it. And we asked the regulator, okay, very courageous. So if you have these prices, you put on, yeah, that's Texas. Inequality drives progress. Yeah, and with all these investors, because if the first bunch of investment took place, then all the price spikes crash. Oh, that's Texas, hit and run. Next day, we have been in the PJM area, and there we talked about price spikes. He said, always if the wholesale market price exceeds the $1,000, the governor calls in, and we need to write papers and papers and papers. And then I asked him, okay, so yesterday your colleague argued the totally different way. So inequality drives progress, volatility is an extremely happy thing, and hit and run, if investors lose the money, is no problem for us. And then he said the interesting thing, yes, that's Texas, but we in New England have a different social contract. And I think all this debate is about the social contract you have, how you assess volatility, etc., etc. The first answer. The second answer, and this is the German perspective, we have on paper the energy-only market. In reality, we have a huge bunch of capacity mechanisms. We have in the southern part of Germany, we have this crazy little state called Bavaria. Whatever the negotiation is in Germany, the prime minister of Bavaria says, I want to have two new built power stations, and he get it. This is not a capacity market, so we have a cogeneration legislation where we give cogeneration plants for free, so 30,000 hours for 4 euro cents, 1,000 euro per kilowatt. It's a capacity market, and so the key issue is, should we have an increasingly broadened and increasingly arbitrary bunch of capacity mechanisms, or should we narrow this down to more, and that was the reason we called this in the Coal Commission the systematic investment framework, and this is about the systematic anti-investment framework, and this is the key challenge. And I think we had all these discussions on the crossing lines and flexibility and all the buzzwords. In the end of the day, security of supply, at least in the social contract we have in Germany, is a political issue, and you need to deal with this in a non-arbitrary way.
Perhaps I'd like to invite Marco to make a little comment on his perspective on capacity markets in Germany.
Especially the Bavarian case, I think, is interesting because the discussion in Germany at that point was deviated in capacity instruments for the wholesale market, and since we have some grid constraints, we need to manage them. So we have what we call a network reserve. So I think those plans apply to the network reserve, and the important thing is, at least from the market design discussion, that when you implement such instruments, that they do not distort the price signal at the wholesale market, because that's what we want everybody to react to, consumers and suppliers. And instruments should not just distort these signals. Otherwise, you get it watered down, and nobody trusts in the price signal, and that's the worst thing you can do. Then you have to step in as a regulator. So
these reserves are growing and growing and growing and growing.
Because of the network challenges, not because of a non-working
The Bavarian case is not about networks. This is lobbying for capacity.
So we can
they're not running in the wholesale market. That's
but the key issue, and I think I would highlight this, that there are fallouts of this debate. So we have all these reserves, and the reserves are increasing. Now we have a design of the tender for the decommissioning of hard coal power plant. The whole design is focused to limit the increase in the reserves, because this cannot be, the reserves cannot be. And I think this is the political reality of this type of instruments. But anyway, we will continue this for next 10 years.
Later on, Rabia. I think there was a question from the middle of the floor, yeah. Sorry, could I remind you to stand up and introduce yourself?
Yeah, Colin Long from Trades Hall again. I'm going to say something that's not going to make me at all popular with the neoliberals that dominate the audience and the panel that entirely made up of neoliberals. It was interesting, Rosemary, to see your chart showing the price and so on. There seems to be a presumption that privatised, market-based systems are going to drive the necessary energy transition. There's no evidence of that anywhere in the world. Germany is not going to make its CO2 emission reduction targets. Australia is a joke when it comes to that sort of thing. Most countries are. The market system is not going to make the cuts that we need in the time that we've got. I think.
Can you move to a question?
Could you answer that? Do you really think a market-based system is going to deliver the CO2 emission cuts that we need in the time that we need them?
Thank you.
No, I would state the opposite. If you really have a look on this decarbonized system, and I think the market design, from my perspective, has always two dimensions. The first is coordinating a system, and secondly, paying back for investments. And if you have a careful look on a decarbonized system, this will be an extremely distributed system. So we ran the German power system for 100 years with 300 units. This summer we had 1.9 million units. And the key issue, how to coordinate a system of 1.9 million units. And the only answer to this is to base the coordination on market price signals. Without market price signals, we will never, never, never be able to coordinate a system which is decarbonized because of the decentral and the variable nature of these decarbonized options.
Okay. Quick comment from Marco, and then we have a question over here.
First of all, for the protocol, I totally agree. And I would like just to add one dimension, and that's innovation. I think, of course, we want to drive investments and all these nice things, but markets are unbelievably innovative. That's something we live every day, but we should also, I think, sometimes acknowledge what actually happens with innovation, especially in the power market. I think there's huge potential. And the other thing is whether it's possible to decarbonize. That was one of your questions. And in Europe, we have the emission trading system. So there's a cap, and it's reducing over time. So, and it's a market-based system. There's, of course, political number setting and all these kind of things. But it's the best we got right now, and it reduces emissions. So when new coal power plants would be built, the total amount of emissions is limited in Europe. So that's just how it works.
A quick comment, perhaps for our visitors. Our chair of the ACCC has actually made a comment that the way we have gone about the privatisation of assets in Australia has left the community wondering on occasion. So there's some substantial questions, I think, on the approach that has been taken in this country. But the second point is, I think that our German speakers have demonstrated to us in spades the importance of bipartisan, long-term planning. And if we had that, where we had voices agreed around the table on the trajectory, then it's a question of where do you use markets to achieve which bit of that. But I don't think we're really out of the starting blocks yet in terms of the agreed bipartisan long-term position. In some recent research we've been doing, one of our consumers made the point. They said they were thinking long-term when they built the Sydney Harbour Bridge, weren't they? Where's that long-term thinking now? So I think that's the missing piece for me anyway.
Question from here.
San Callis, RMIT, and I have two extremely short and hopefully very uncontroversial questions. One is to David, and this is mostly a question born out of frustration. 28 days to comment on such an important piece of work as the ESB 2025 project. Basically, will there be future opportunities to participate in this process? Because at least for the academics, this mid-semester, it's basically, it might just be 38 pages, but there's a lot in there, and that's, has been frustrating, and we probably won't manage to comment. And super quick one, Dr. Mattes, are you basing your presentation on a publication, and will this be available on the Eco Institute's website in the future?
It is.
Just a quick response, please, because we've run out of time, I'm afraid. But just a super quick response.
It is available. That there will be made we have made even an English paper on what we call the focused capacity market, so that it's available.
Thank you so much. Sorry, we've run out of time for more questions, but.
Yes, we've got lots of consulting processes coming up. We've got, I'm here tomorrow even for a technical working group meeting, but we've got meetings with stakeholders right through. We'll expect submissions to the issues paper by the end of September, but that doesn't mean that we can't take information right through to the end of this year in terms of the breadth of things that we're looking at.
Look, I'd like you to join me in thanking the panelists once again for a very interesting discussion.
Thank you so much. And with these fascinating debates and all the expertise that is here in the room, we have people in the room that have years and decades of experience in the energy transition. We have somebody, for example, designing the sectoral targets in Germany here in the room, and others. So then the coffee breaks are almost always the most productive time when you get to meet each other, exchange information, and here I am again standing in between you and the coffee break. So first, special thanks to also Rosemarie and the Energy Consumers Australia. She supported a tool by Simon and Dylan, the OpenM that you already saw, adding transparency to the energy markets and a lot of information, openm.org.au. Then thank you also for a technology transfer in action. Felix Mattes provided us his fancy new pointer, and now we had a slick set of presentations in the afternoon. Thank you so much. You might see the theme of our first day. It's about a power system transformation. It's about the technology, the flexibility options. It's about the market design. And now we get, after the break, to another very important issue that the Minister already raised, which is the social dimension of the transition. So all these four are the fundamental prerequisite for making the energy transition a success story in a much wider sense, to which we come to in the second day, which is the export story, also the economic opportunities, for example, of hydrogen. So that also nice to tie us together, and today is mostly focused on the information exchange, but tomorrow will also be about the cooperation and the coordination between Australia and Germany. And for that, to prepare us there for the next day, we have a little prize to give now over the coffee break and then over the reception, because we are again putting up these interactive slides, and you can pitch your idea for the best cooperation project between Australia and Germany, and you can now vote them up or down. And the one that will end up by the end of the reception today as the top winner, we will have a little prize for you to be presented tomorrow. So please pitch your cooperation idea. Without cooperation among Australia and Germany, and also Japan and South Korea, we are not going to manage the net zero target that we all signed up to in the Paris Agreement. So with that, Thank you very much. You have a coffee break here. We are going to meet slightly delayed at 4:15 back here in this room. Go to polef.com Climate College in order to win your prize for the best cooperation idea. Thank you so much.